So Keith Beverly is here to join us today, and he is the owner of Grid 202 Partners. He's a managing partner and chief investment advisor. Keith is one of the few African-American advisors at an independent RIA, which means a registered investment advisor firm, who holds both the CFP, the Certified Financial Planner, and CFA, Chartered Financial Analyst credentials. And if that's not enough, he graduated from Carnegie Mellon's Tepper School of Business with honors, got his M.B.A. from UNC's Kenan-Flagler Business School, where he was a Dean's Fellow. He also sits on the board of North Carolina AT&T's Department of Family and Consumer Services, one of 4 CFP Board-registered programs at a historically Black college. And I just saw in an interview that he bought his first stock when he was 14 years old. So
long time ago.
Yes.
Very long time.
But I love that fact. I love that fact because it just shows like that you were always really passionate about investing and and finances, right? And what got you into it? Why are you so why were you so interested in and bought your first stock at the age of 14?
Yeah, so the stock purchase is interesting because I was in my dad's house and just stumbled upon one of his Charles Schwab statements and just asked him about it, and just developed that curiosity back then. And for the company I actually bought, so this is what I did. So this is my freshman year. So my freshman year of high school, and I had a summer job and saved up all my money and for the year. And I've always been a fairly frugal guy. I think my wife will tell you that. So always been frugal, even at that age. So I saved up a lot of money and decided I was going to invest it and grow my wealth and start having compound interest work in my favor from an early age. And then I invested in this company, and it pretty much went belly up a few months later. And so I resolved myself at that point to never make an uninformed investment decision. Always do my due diligence and do research. So it was a great lesson. So I think sometimes early in your career, no matter what you do, you get some early success, and sometimes it's just luck, and you end up making larger mistakes later on. So it was a good learning experience to be hit hard with my very first purchase that I ever made. So but yeah, for me from then on, I've been very passionate about markets and reading great investors in high school and college, and then develop my own philosophy along the line.
Mm-hmm. Now, in terms of your firm, you guys put out a blog post on combating systemic racism.
Correct. Yep.
In your opinion, how is racial justice tied into economic justice?
Oh wow! So how is it not tied into to economic justice? I mean, it is such a they're so inextricably linked. Like if you look at just how our society operates, I mean, we are in a capitalist society, so capital, your capital decisions that you make, how you approach wealth, how you manage your wealth affects, as we see today, like literally, your ability to live, right? It affects your life in all types of ways. And for us, a lot of our clients are what we call first generation affluent. So they may be the first person, first household in their family to be at a point where they're high income earners, and they can really, really create generational wealth for their family and look after, multiple generations. And, for us, that, how when we look at society today, from, how you're invested in your portfolio, are you invested in companies that are profiting from profiting from people of color being unjustly imprisoned, and profiting from higher rates of pollution in communities of color, and if you are invested in those companies, how do you get out of those companies and get out of those types of names and invest in a way that's more aligned with your principles and what matters to you?
Mm-hmm. Yeah, that's one of the things that was on the blog post was like 10 questions to ask your financial advisor.
Yep.
And, one of the questions was that, does your firm currently have, or has your firm in the past provided financial support to private prisons, right? Why is that an important question to ask?
Well, I mean, my personal view on the prison, industrial complex is that, you know, we all know, like the data shows that, white households, white individuals and people of color commit crimes at the same rate, right? But, people of color make up about half of the prison population. That's not by happenstance. I think there's systems in place. I mean, we see a lot of the outrage today around, criminal justice reform and, policing tactics. But a lot of it is systemic. So when you have a group that feels as though they are threatened, and you have another group that doesn't have that same level of power, and then you have a system where for minor infractions you can be you can be placed in jail because strictly due to your economic position, right? So you have a traffic ticket and you can't afford to go to jail and post bail, and you end up in the criminal justice system, right? And then that in turn affects your ability to retain employment, right? So it becomes this cycle where because the systems that are in place that aren't really looking to support Black and brown citizens, and really looking to, in many ways, inflict pain and be detrimental to our health and well-being. How do you counter that? How do you counter it?
Mm-hmm. Yeah, absolutely. And you also wrote a letter to the Chartered Financial Analyst Institute requesting discipline for Amy Cooper. Why did you do that?
Yeah, so I'm a chartered financial analyst, just as Amy Cooper, I believe, still is. And I mean, we have ethical standards, as charter holders. And in my view, she was not upholding our standards. Particularly when you're caught on video accusing someone of doing something that they weren't, and potentially putting that person in harm's way. In my view, that's not consistent with the ethical standards of charter holders. So I expressed that to the CFA Institute, and there are we have recourse to submit those types of notices for disciplinary action, and CFA Institute that can take it into consideration and choose to act or not. And today, I don't think they've made a statement. They definitely haven't responded to me as far as any disciplinary action being taken against her.
So that, I mean, it's interesting because, sometimes like firms may want to, stay out of public discourses, right?
Yeah.
But it seems that like you don't shy away from that.
No, if I was going to be somewhere where my voice was not going to be heard, or if I had to be filtered, I'd go work at a big Wall Street firm and not deal with the headaches of being an entrepreneur and building something. And that's not to say I have tons of friends who are in those types of roles. But I think for me, I don't have the temperament to to hold my tongue and to not express myself, and not to stand out for injustices when they exist and when I see them. And I recognize that very early in my career. And yes, it's been in some ways not a traditional path for someone from that has my affiliations, but I'm happy with it because for the sacrifices I've made by having to go the independent route and not go the traditional route. I'm able to write a letter to someone for acting out of line and not have to worry about a managing director coming and having a conversation with me, or giving me a stern, reprimand for that type of behavior. So it all balances out, at least from my vantage point.
Yeah. Toledo's asking, how long has it been since you wrote that letter?
I wrote that letter the week of the incident. So I want to say it happened on a Sunday. I wrote it that Wednesday or Thursday. So I wrote it like 2 or 3 days later.
Yeah. Now, in terms of like, you were just talking about how your firm, wouldn't be the kind of firm that would, discipline you or any of that kind of stuff, right? It's your firm, you and another partner, right?
Camille. Mm-hmm.
Camille owns it. And then, so how does your firm incorporate like racial equity, social justice into your investment philosophies?
Sure. So one, we are committed to socially responsible investing, and that means different things to different people. And we look at investments both in public markets and private markets. And when it comes to racial equity, what we found is it's easier to actually execute on a racial equity lens approach to investing in private markets versus public markets. In large part because there isn't the type of data you would want to see on the public market side. And with private markets, you can be much more targeted in how you're allocating capital. And you can do it in other vehicles, but it's harder and more difficult on the public market side. So for public market investments, let me clarify, I'm sorry, because I'm talking public and private. So public market investments, you have a TD Ameritrade, Fidelity account, Schwab. You can go in and execute trades. You can buy ETFs, mutual funds, bonds. All that is considered public markets. So private markets would be everything outside of public markets. So that's the easiest way to think about it. So when you hear about private equity and venture capital, angel investments, hedge funds, like for the most part, like those are going to be private market investments. And for us, for our public market investments that we're making, we start with, Morningstar has a decent amount of data. They just acquired a company called Sustainalytics. So a lot of us that are on the impact side of things, we rely on them for screens and to track data associated with different public market companies for the most part. So we start there, and then we do screens on what managers are actually holding in their portfolio, right? So, if you are a manager and through our analysis, you come up and you're on a short list because of your performance and other attributes that we look at when we're assessing managers. But it turns out that you own private prisons, then you're eliminated from our list, right? So that's what it looks like on the public market side. For private markets, there are a lot of funds that are investing in themes that are looking to put capital in the hands of founders of color, or looking to help benefit and strengthen communities of color in some shape or form. It could be in the education space. It could be providing easier access to capital. It could be investing in founders of color in their firms and what they're doing. So on the private market side, I think it's easier to be more targeted in how you're allocating capital. And then there's also just a lot of diverse managers who are in the private market realm as well. And then also separately managed accounts. So separately managed accounts are going to be strong track records, but are doing so in separately managed accounts, which are different from mutual funds.
Mm-hmm. Now, a lot of financial planners will take like a more passive approach to investing their clients' portfolios. However, that's not something, you're not in that category. Like, you try to take a more active approach, right?
Yes, well, we do a mix of passive and active. When it comes to ESG and SRI investing, impact investing, there are some passive options out there, but it's more difficult, I think, to really try to achieve the type of results you want to achieve from an impact perspective by investing in hundreds of companies through passive investment options. But we do have some passive holdings, and for our impact portfolios, it's probably 30 to 40% are in passive passive managers, passive funds, and the remainder are in active funds. And again, coming back to the private markets, we want to get some exposure there and try to be as targeted as we can be.
Mm-hmm. Now, when you are looking at investments, I mean, one of the things that, I start my clients off with is their core values, right? And really learning what their values are, and then looking at it from a lens of everything they're doing in their lives, whether it's, making decisions about their, their careers, or if it's making decisions around like what they want to do with their money. How do you in your firm put that kind of priority on your client's values, and then making a impact with their investments?
Yeah, so you hit the nail right on the head when you said that you look at their career and how that affects their money. Like we start there in looking at the type of income stream they're going to have. I mean, vast majority of our clients are still working. So we have some clients who are retired and no longer working, but the vast majority are. So we start with, what does your income stream look like? Is it more like a bond or more like a stock? Meaning, is it going to be inherently more risky? So if you're in a risky profession and your income is so let's say an example would be if you're in a sales profession where all of your 100% of your income is strictly driven by commission, right? And you can have a good year one year and a bad year the next year. Like that's a fairly volatile income stream. So all else the same, we want you to be more conservative with how you're allocating your investments. Now from there, we ask questions to understand what's important to you, what matters to you. Are you very passionate about the environment? Very passionate about racial equity? Very passionate about gender equity? Very passionate about eliminating poverty and international issues. So whatever those causes, whatever those passions are for you individually, how can we then look to tie an investment portfolio and construct an investment portfolio that's aligned with those with those passions, with those values that are most important to you and make you who you are. And I'd say 10, 20 years ago that would be a very very large, a very, very difficult undertaking to say, okay, well, Katie, you really care about gender equity. All right, well, here's some stock, here's a portfolio of stocks for you. And I may or may not be able to tell you how committed these companies are to gender equity, but now we can at least say, well, here's some companies that we know, have X percentage of women on their boards. Here's some companies that we know are, have a certain number of women employees, and we can look at the pay and whether or not there's equity there for some companies. And if the company doesn't disclose that information, that's also telling as well. So maybe the companies that aren't participating in that level of data aren't companies that you would want to include in your portfolio. So 20 years ago, you couldn't get down to that level of specificity, but there are more more vehicles now, more information now where you can be more granular.
What's interesting is when I was doing my own investing, I was in things like Domini social equity funds and things that have that are aligned with my values. And then when I switched into a firm, one of the first things they said to me was that, oh, you're not going to be making any money from those kinds of investments.
Right, which is not accurate.
Right.
It's not accurate at all. Right, and that's it was a big misnomer for a while, but I think there's enough academic data, empirical data, to show that that's not the case. What you found for a long time is it was a lot of the performance was just driven by sector weightings. So if you're if it's a period where you're invested in a traditional SRI ESG type of lens investment, and you don't have any exposure to tobacco companies and defense companies and more like value-oriented companies. It's value from a stock perspective, right? So they're paying large dividends, and they're considered value companies because because of their dividends and the type of growth profile that they have. So a lot of that can be explained by sector weighting. So you would be more weighted in technology. So if technology underperforms, then your portfolio will underperform. But I think a lot of those kind of early misconceptions about SRI ESG investing have been addressed in empirical fashion. So we know that's not the case. You can still invest with your values and still generate good returns.
That's really important. That's really important for, I think, everyone to know that yes, you can.
Yeah, and
you can make money and align with your values.
Right. And I tell my clients all the time. So our interests are aligned. So if my clients make more money and become wealthier, we're going to benefit from that as a firm. But also, I want them to be wealthy. I want them to make money because I know where that money is going to go. Right. More of that money is going to go into the church. More of that money is going to go into social ventures. More of that money is going to go into the programs that they're involved with. So I want them to be wealthy. I want them to accumulate wealth. So to sacrifice returns isn't appealing to me at all. So I want them to do both. I want them to generate great returns while they're doing good and aligning their capital and their assets with what's most important to them.
Yeah, a lot of times I'll talk to clients who are just like, well, they'll have this internal belief that, doing good and being a good person doesn't also equal to making money.
Right.
And that's one of the things that, one of the beliefs I try to bust through with them. Right. And so what in your view, what is the importance on money for yourself? Like, why do you think money is important?
For me personally, or for my clients?
For you personally.
For me personally, I need to generate more money, and I'm thinking about the firm. And this is something that I've like over the past 12 months or so, like my trajectory and plan for the firm has changed because there just aren't career paths for diverse advisors in this industry. So I'm thinking much bigger about what the firm can and should be in order to create opportunities for the next generation of advisors. So I need to generate more money so I can hire people who aren't going to go into workplaces where, they're the only, and where they have to experience, all types of abuses and I mean, the stories that I hear, especially from Black women in particular who are in this field at RIAs and brokerage houses, it's horrendous, like the treatment. So, one of my big motivations right now is to grow our firm to a point where we can, hire more talent and be in a position where we can provide a comfortable and nourishing environment for them.
Mm-hmm. That's really important. Tilly is asking, what's an RIA? It's a registered investment advisor.
Yeah. So RIAs versus brokerage houses. The main difference is this. So we're 100% independent, and we're legally obligated to always put our clients' interests first, which isn't the case at a lot of at any of the brokerage houses, the insurance companies. So we are fiduciaries in every sense of the word. So that's the main difference, is that RIAs are independent and are required to be fiduciaries, and also as a certified financial planner, we're held to the fiduciary standard.
Mm-hmm. Absolutely.
And that's good. What's been past like several prospect meetings we've had over the past few weeks, and a lot of them are asking that fiduciary question, which is encouraging to see. Like many of them, I want to say probably 70-80% of our prospective clients who we meet with are asking if we're fiduciary. So I think the CFP board is definitely doing a great job of stressing the importance of asking that question specifically to, you know, folks that are in the market for an advisor.
Yeah, absolutely. I think that now that more people are getting educated about what a fiduciary does and doesn't do, the more that, yeah, you're going to hear that for sure. All right. And I'd love to open it up for questions for anybody who has a question for Keith.
I have a question. Hi.
Hi.
Hey, Keith, thank you so much for this. It's so inspiring to know that we can invest in things that can change the world for good. Because I just kind of like with the money mindset around good people can make money. It's exciting, like what can happen if we invest our money in the values and the things we care about. So we're at the point where we'll probably start thinking of investing soon. I don't have an IRA. I have one 401k. My husband has an IRA. But what would be, if someone like me were to come to you and start working with you, what would be the first steps that we would work on together?
Well, first step would be, you know, what are you looking to accomplish, and who are you? Like, what's important to you? What are you looking to accomplish? And what, you know, what's your current financial position, right? So, you know, we know people who want to retire early. You know, people who, you know, want to work until they're in their 70s and 80s. But whatever, you know, whatever your objectives are, how can we then, you know, match your capital and your resources to achieve those objectives? So, you know, the first step is always just to gather information and just, you know, ask questions and learn more about, you know, you and what you're looking to accomplish in your current situation.
Cool. All right.
Yeah. Where are you based, Elise?
I'm based in Rhode Island, in New England.
Okay.
Rhode Island, New York. But I'm just so excited because you're the first person that I know who does this kind of work, that where it's, they're like people, most financial people that I've met in my life outside of Katie have been like people that I don't have values that align. So it's really exciting to just think that there will be someone that I can have the conversation with.
Yeah, that's why I wanted to bring you on, Keith, because you're very rare in this world.
Yeah, I mean, the industry it's a tough industry, and you know, again, as a Black advisor and understanding, I mean, just look at what, you know, the financial services industry has done and continues to do to, you know, Black and brown communities. I mean, you have redlining, you have predatory lending, you have, you know, even today, these big companies who are announcing all the, you know, hundreds of millions of dollars that they're putting into these nonprofits committed to racial justice, but they are still charging these exorbitant fees to, you know, all of their account holders through, you know, the surcharges and the overdraft fees. So it's like on one side, one hand, you have, you know, what people are publicly stating and what they're publicly saying, but, you know, for those of us who are in the industry, we know, one, that you aren't really treating your advisor of color well. So you can just Google racial discrimination. I think this might have been one of my questions, but if you just Google racial discrimination lawsuit in any of the big firms, like, you'll see that they've, you know, settled for tens of millions, hundreds of millions of dollars, because they aren't good environments for advisors of color, and they aren't treating their employees, their customers well. You know, their customers of color as well either, because you know, they take advantage of them, and, you know, we've seen that repeatedly in several different cases, several different companies. So, you know, for me, I've always had certain non-negotiables that I've had, you know, throughout my career, which have limited my career opportunities, because there are certain firms that I just wouldn't feel comfortable working, which has led me to be independent and having my own firm.
Yes. Now that's interesting. And you may not want to answer this question because you work with a lot of athletes, but for me, like the fact that the NFL has now come out and said, you know, we do support Black Lives Matter. But, you know, for me, I really believe that, like, put your money where your mouth is and like, hire Colin Kaepernick back, like maybe repay him for all that time, that he wasn't playing. And that would actually show more action than actually just coming out and saying a bunch of things that they're saying.
Yeah. The word, the new phrase is performative allyship, and I think that's exactly what it is. And I haven't heard anything from the owners. I know Goodell came out and made a statement. Have any of the owners come out and said anything around Kaepernick? No. Yeah. So they've in that whole, and this is something that's coming from someone who played football undergrad in high school and loved watching the game and has NFL clients. But the fact, the way in which they conspired against him and really just made an example out of him is beyond frustrating and just deplorable in my view.
Mm-hmm. I agree. Anyone else have any questions? I think Autumn, you had a question before too.
Yeah, I have a SEP, and I don't think it's a SEP. I have an IRA and I just let it go, but I'm kind of afraid of investing. I've always been a little afraid. I don't understand money and I don't know. That's my question. I'm kind of afraid of investing.
Okay. Where does that stem from, Autumn?
We just grew up poor. My parents didn't have any stocks and bonds, and I don't negotiate money well. I mean, Katie knows this. I always ask for lower than I should, and I don't have a great relationship with money, which I'm working on. So I just would feel, I think a firm like yours would make me feel better because I do care about social stuff. So maybe it's just finding the right place that I would feel comfortable investing. But I guess I also am worried about the market. Like, why is the market high and the world is falling apart? Like, I don't understand that. I
don't understand that either. Can you give me an answer to that? Can you give me an answer to how 30 million people are out of work and
I don't understand.
The market has rebounded over 30%.
Can I get?
I don't have an answer to that.
I have a quick answer to that. Please. I feel like it is the wealth disparity in this country. It's like the people who have money can continue to put their investments into it, and then they can actually even buy more stocks when stocks are down. And so it keeps things going on a different level than what most people experience in their lives. And to me, that's the difference.
That is the difference. And there's another difference, which is unique to this environment which we live now. But I don't want to get too technical here. But so the Federal Reserve in mid-March, they made an announcement that they were going to start. They essentially made an announcement that they were going to support the bond market. And that's unheard of and it's outside of their charter. And not only support the bond market, but support the most risky class of bonds. So being, high yield bonds or, what a lot of people refer to as junk debt. So when they made an announcement, it essentially sent a signal to investors that they were providing a backstop to the market, which in my view is very distorted in this market manipulation. When you say that you're going to invest in mind you, when we're talking about high yield bonds and junk bonds, like this is unprecedented. Like because the Fed should invest in treasuries and that's it. It shouldn't invest in corporate bonds. They shouldn't invest in stocks. Shouldn't invest in junk bonds. And junk bonds or high yield bonds are just a level away from investing in equities, right? So when you think of the Federal Reserve, you don't think of the Federal Reserve going out and buying Google stock, but them making the statement and making the move to invest in high yield debt is like literally one, I'll say two levels below, because preferred debt would be one level below. But they're right there, a step away from starting to invest in equity. So what that does to the market participants is they say that the Fed has said, essentially sent the message that they're going to uphold a certain level in the market, and that all bets are off. You can go in and invest in, the Fed is going to cover you. So that's the message that they effectively sent to market participants. And we'll see. I think there was an announcement recently that the president is looking to put another $1 trillion into different projects. But the amount of debt that we're taking on as a country, yes, we did need significant and unprecedented assistance, given the pandemic and people being out of work for months. But if you look at how it was directed, you look at how many small businesses actually received PPP funding, and in the business, like we don't have this data, but hopefully someone will do some digging and discover it. But my guess would be that we'll see that entrepreneurs of color weren't extended loans to the same extent, same level as non-entrepreneurs of color. And those are, you talk about racial equity, systemic justice. What does that look like in your portfolio, right? So a company that actually extended loans, that was proactive, intentional about making sure that their companies that were minority-owned businesses receive capital and receive support. We want to invest in those companies and not the other ones. We probably won't have that data for a while, if ever. But that's how we're thinking about investments and how we manage our client portfolios.
Does that quite
It does. It actually just reassures me, that the government's still trying to do some shady stuff, but it doesn't mean you can't invest in things that matter. And I have to apologize. Thank you so much. I have an appointment, but I'm going to watch the rest on later. And thank you for your time. I really appreciate it.
Oh, thank you, Autumn. We'd love to connect with you after the call.
Absolutely. Bye-bye.
Thanks.
Martine's asking, how did you gain the confidence to do the investment side of financial planning?
The confidence. I don't know if you ever have the confidence to manage other people's money. I think you have to always be, humble and conscientious, but and recognize like how much of a honor, how much pressure it is. So, yes, I have confidence in me to I have the knowledge, and I think that I can. My clients are better off with me making investment decisions on their behalf than they are on their own. But I also love to educate my clients, right? So I love to educate them about what it is that you're investing in, and why you're doing it. Like, why not just put all your money in cash and just let your cash grow? All right. Why don't you do that? Well, because there's this thing called inflation. Because if you just did that and that's all you did, you might not be able to retire when you want to, or buy the vacation home, or leave the certain amount to charity that you might want to leave, or give as much as you want to a charter school that you've been volunteering at. So capital markets help to make those types of objectives and those types of goals within reach, and more than anything, it'll help you get there faster, on average. Mm-hmm. So you can save up all your money, put all your cash away, but it's just going to take you, twice as long than if you had invested in, financial markets and made them work for you.
Absolutely. Justin had a question.
Hey, Katie, thank you. Talita had asked one in the chat before we put that in.
Okay. Talita, do you want to ask your question? Her question?
Oh.
Yeah, why don't you ask your question to Keith?
That's thank you. This was me and Katie had spoken about this a few weeks ago, I guess. So just wanted to get more insight into determining the best place, I guess, to roll over my 401k from my previous employer. I've been told that, yeah, it's fine there, but I just feel weird since I don't work there anymore that it should be somewhere else and in a place that's going to work the most for me, or,
And so you're an entrepreneur? You have your own company?
Mm-hmm. I started last year. Mm-hmm.
Okay. You can start your own 401k. You could do what's called an individual 401k.
Oh. Okay. Wasn't aware of that. And see,
Yeah.
it's things like that where I'm so far, I feel, removed from that kind of knowledge, because I assume, or you have to be at a certain financial bracket first before you can even, think about stuff like that.
No, not to create your own individual 401k, but then you'll have income coming in, so you can start contributing to that. We work with clients where they've been with us long enough from when we were originally working with them. They set up their solo 401k, and now they have over 10 employees, and now we had to expand it to a traditional 401k, and we've gone and talked to their employees about the plan, and you can easily make that transition from an individual 401k to a traditional 401k. But for a solo 401k, it's not an arduous process at all, and that'd be my recommendation, because you may get to a point within your business where it makes sense for you to do to contribute to a Roth IRAs. And if you are past certain income thresholds, you'll have to do so through what's called a backdoor Roth IRA. And when you have money in an IRA as opposed to a 401k, there's some tax implications that you have to contend with that you don't have to worry about if you have all your assets in a 401k.
Oh, gotcha.
That's your reason why, instead of like her opening up a SEP IRA?
Yes. Yeah, that's my initial thought. I would probably want to dig a little bit deeper. Yes, that'd be my initial thought. But SEPs work as well. And I don't think SEPs would influence the backdoor Roth. I think those are just the traditional IRAs. So yeah, from a backdoor Roth perspective, you would still be fine. SEP IRA or individual 401k. We like the individual 401ks because if you make the transition to a traditional 401k, it's less work and it's more seamless.
Gotcha. Okay, thank you.
Right.
Yeah.
That's great. Okay, Justin, what's your question?
Hi, Keith. I'm on with Elise. I was on a call, so I missed the beginning of yours. Apologies. But
No worries.
Thank you. I just wanted to maybe get your take on, I've been getting a lot of paperwork from my current portfolio about ETFs versus mutual funds, and what your thoughts are on ETFs. I don't know a lot about them. I know that the main difference is they're able to be traded like stocks as opposed to managed more like a fund. But I'm sorry to say that I'm largely ignorant on the benefits or the risks involved with an ETF.
Yeah. So the way in which they traded is probably like 30-40% of the difference between exchange traded funds, ETFs, and mutual funds. So ETFs, like you said, you can trade in them throughout the day, whereas mutual funds you just trade at the end of the day, just one time.
Right.
The other benefit oftentimes with ETFs is they can be more tax efficient than mutual funds, and a lot of times they have lower costs than traditional mutual funds. But it really varies as far as what makes the most sense for you. We have a mix of ETFs and mutual funds for our clients, so it depends on a couple of things. I'd say how important and how targeted you want to be with your ESG investing. Like I think, as I was saying earlier, it's easier to do with mutual funds, easier to do with private market investments. But if you want to keep expenses down, ETFs are also a good option for you. But when you say that they're sending you a lot of information about ETFs, is it just
Well, I imagine they're trying.
Is it for specific ETFs, or
no,
is it for their ETFs?
Specific, but it seems to my brother-in-laws have mentioned them. Our current financial advisor has mentioned them a number of times.
Is that an index fund?
And so it's the way they're traded and packaged, and I don't know. I need to learn more about it. But what's your personal take on that? It seems like a little bit more Wild West to the way the market used to work.
Yeah.
From what I'm reading.
So just to be clear, like ETFs are they're investing usually. They look to replicate some index, so or a sector, right? So if you have a view on biotechnology, you have a view on the small cap stocks, you have a view on oil. Like you can find an ETF now that whatever your view is, you can have it executed through some ETF that's been developed. So in some ways, because you have more options, yeah, I could see you making the case that it could feel like the wild, wild west out there. But for the most part, I think keeping things simple and to the extent that you want to find exposure to certain sectors, then ETFs are a good way for you to do that. And usually they're going to be cost effective. Usually they'll be cost effective compared to mutual funds.
So would ETFs give you greater ability to target what you're investing in and keep your investments out of certain industries?
They can be. But you can also find like actual mutual funds that are related to that theme as well. So it really depends. It really depends on like the values and what's important and what you're looking to accomplish.
Yeah. Cool. Great. Thank you very much. I appreciate that.
Yeah, you're welcome.
Anybody else have any other questions?
Anything else? Talita, you said you were a track and field athlete. Are you sprinter, long distance?
I'm a triple jumper.
Triple jumper.
Yeah.
Don't come across too many triple jumpers.
I mean, I run the 400 as well, but my specialty is triple jump.
Triple jumping.
Yes.
Okay. Well, that's great.
Thank you. Yeah, I was half joking as far as being your athlete client, because it's interesting. I've never had a goal of becoming a professional at it. My only goal has ever been to be an Olympian, which is not like Olympians are. I could go into that. This is not the place for that. But so obviously, I would assume your athlete clients, they're athletes whose sport is their profession, so to speak. So that's why I was half joking about that. Yeah. But yes, that's been my life's goal, my life's work.
Okay. Where are you based?
Right now, I live in Los Angeles.
In LA. Okay. Yeah. So you can be a track and field athlete. You have nice weather year round. Get out there.
That which is why we moved here, was specifically for my training. Yeah.
Nice.
Yeah. She was hoping to qualify for Tokyo this year, but obviously with the pandemic, things have been pushed back, right?
That's tough. Have they pushed it back to like another year or another 2 years? What have they? Last
I heard was 1 year. Yeah.
1 year. Okay. So now they're going to be in an odd year.
Exactly. Messing it all up.
Corona's just throwing everything off.
Exactly.
Olympics in an odd year. Wow. That's horrible.
Right. Oh dear.
Well, if no one else has any other questions, how do people find you, Keith?
Yes, our website is grid202partners.com. So GRID202partners.com. But you can just email me. So my email is just Keith, KEITH, @grid202partners.com.
All right. Thank you guys, everybody.
Right. Thank you.
Bye.
Thanks.